Hello, today is the 25th of July 2011, and welcome to today's silver analysis. Before we get started within the charts, the NFL season is actually going to have a season this year as the lockout has came to an end. If you like fantasy football like myself and you would want to join the same league that I am, then send me a message one way or the other, whether it be through email, this comment, YouTube mail, whatever. Let me know that you're interested. Nothing has been set up yet. This is only for open interest right now. I'm doing a deep league this year, about 20 people, and it would be set up within these position players. No team defenses, but there will be two defensive players, a defensive lineman or linebacker, as well as a defensive back, which is either a safety or a corner. Let's now get started within the silver analysis. And as of 2:05 Eastern Time, silver is $40.40. And as of 2:18 p.m. Eastern Time, it is $40.31. What I'm going to do within this video is go over a little bit of my very unique style as far as entry and exit points, as well as how this works within technical analysis using multiple time frames. Now, what's important to know is that what I like to do for the most part is buy when it's really cheap and then sell when it's extremely expensive. And these bands can work as good areas to use as entries to sell. Here is the problem though. Because you're at this area today, this would not be an area I would be looking to sell. And the reason for that is the more often support is tested, the more likely it'll be taken out. The more often resistance is tested, the more likely it will be taken out as well. Therefore, at this point in here, it may not have been so bad to get in on some selling entries within the silver analysis. And for the most part, when I'm in a bull market, I like to see something happen like boom, come right back down to this level and find support. But for the most part, I want to use this as an indicator. Therefore, on the shorter term time frames, I'm seeing a rising 18 period average, and therefore I'm looking for long setups because of this. Because it's up so much, then I really wouldn't want to be buying now. But here again is the kicker. If I'm playing this type of chart on a yearly time frame, I'd be better off to do it within the real physical 9/9 silver. And it's looking as if it does want to break through this. So if I don't have any positions whatsoever, then I would want to get in on this because I realize the fundamentals for the dollar isn't good. And the technicals for the silver market here is showing that we can go much higher. We're still below these levels in here. And when I was stating before, and I'm still going to say the same thing, as long as the price is really in double digits, but even below 80, then you are buying, in my opinion, at a very cheap price. We'll now move this on towards the quarterly time frame, looking for possible buy options or buy orders. And within this chart, it did manage to go up towards this band in here, which again, it's an area where you may be looking to sell. If that's what you want, it's too late now because it's already sold off. And we're seeing a situation within these candles where it broke through this major resistance level, roughly at around 18.5, $19 per ounce. Back in here, you've had 1, 2, 3 up candles, a sideways consolidation that is now moving again towards the upside. Myself, I'd like to have bigger retracements when I'm looking to get into entry points. So again, I would have to use the yearly and the quarterly chart to look for entry points. I know that it's a situation where it could go lower because it's still well above this trend line. But again, like I stated, we had this consolidation period. The upper band right now is at $56, and with the price currently at 40, that would mean a significant gain of about 40% to get up towards the top part of this band. Same thing, the fundamentals for this does show reason for the market to continue to go higher, And again, you have no position. I do not know what it is that you're waiting for. And when we look at this monthly chart, we can see in here how it was playing along with these bands for a little over 1/2 of a year. And then all of a sudden, it's managed to have this red candle, a sideways month, find support at this 18 period average of highs, which is at $34 an ounce. Therefore, if you're looking to buy on weakness and you bought in or around 34, then you're doing fairly well, to say the least. As far as some previous entries are concerned, I would be the type of person that, yeah, I would be buying in here possibly. So if you're buying on this 18 period average, then you can also get burnt. However, if you're playing this game and you realize, if I buy now and it happens to go down a little bit, you have to ask yourself, are you okay with that? Are you able to take a move that could take you lower and then have to go through the time process of getting back your losses to break even and then eventually back into the positive? That would be a big question to ask yourself. And then again, if you're going to be playing on weakness, are you going to be playing with more of a stop loss? And I'll get more into that when I talk about the quarterly chart, because that would be more of a paper game. Not always, but it still would be such the case. No, but going back to this, we've now found support at this area, breaking down below the support level, and we'd be looking for a possible test at this Fibonacci mark, which is located at $25.30. I don't think that it's going to make it there, but it obviously has a potential to do so. And yes, we'll now move on to the weekly chart. And we've seen now that it's doing well, trying to get above this level. The week has just begun for this current period, but it's so far off to a pretty good start. When it sold off in here with this decent sized candle right towards this 18 period average, which is front weighted, of highs, lows, and closes, and again at this Fibonacci. So anytime that you are looking to buy on weakness, a lot of people don't like to do such a thing. I'm a little bit different on it. And you see in here that it's worked out fairly well, because you're at an area where you expect the market to really stop going lower. That doesn't necessarily means that it will, but most times when you have a correction, it can just be this basic smaller size that you are seeing in here, which takes you to one expected level, which really was this blue line with this combination of this particular Fibonacci. Now, as far as the strength is concerned, this is the area that I'd be looking to get in on strength. If you're playing this within the paper market, then you'd have to decide where you want your stop. Do you want it below the 18 period average of closes? Do you want it below the 18 period average of lows? Are you looking for the market to come back down to this area of support and go higher? If you're looking for it to go back, then you're pretty much buying on weakness, which is what I would be more apt to do. Instead of buying it on strength, which would be upwards in here, I would rather wait to come back in here. And what this essentially can do is make my risk versus reward better, because if I want to stop below here and I'm buying here, that means I'd have to go all the way down to $34, and that's a pretty decent size percentage stop loss. But by coming down here with the exact same stop loss, now the percentage might be about 8% or whatever. It'd be a lot lower than it would be before. The advantage for this, of course, is just that. But the disadvantage is if it keeps going higher, you do not get your entry point in, no matter what method you use. It's very important to know what your risks are, what the rewards are, and then find out the calculations from there and decide what the best play happens to be. Moving on now to the daily chart. And within this particular chart, we've had this declining period average in here. We have one Fibonacci above the middle part of the screen and another one pretty much at the top part. And that's because it calculates Fibonacci over a 67 period automated. And that's 17 ticks before the start of this particular candle. And it was much higher before then. This was a big significant level that I've been talking about before. It's now held above this for 1, 2, 3, 4, 5, 6, 7. This is the 8th consecutive day it's been holding above 38, which to me is showing very good confirmation signs that it does not want to go over, because below this line is bearish, below this is bullish, and in between is neutral. So it's not bearish anymore. Myself, I look at the chart like this and I see what has recently occurred, which was a move up towards this band, came back lower. Let me just move that other line. Came to this band and came back in here. Okay, I had to pause the tape there. I know where I was talking. I was talking about this candle and how normally when you see something like this, that it's normally, or 90+%, 80% of the time, that's a bearish candle. That was one of the rare few exceptions that was not, because what we noticed was it broke past this previous resistance and then came back down to support at this line. And again, when I like to be purchasing on weakness, this is a situation in here where you break past this line. Okay, now what I want to do is I want the market to come back down to this line where I can make a purchase. And now if you can say, well, where's my stop going to be? If you're playing the paper game, here, whatever you decide. And it ended up being a nice support level. And it's not always going to be that way. But the way I look at it is, if a specific area is got a good chance of being resistance or support, then it just becomes a self-fulfilling prophecy from there. Now it got up to this band in here, and there's a 4-candle consolidation. Now which 4 candles you use, it doesn't matter. It's either this candle to this candle, or it's this candle to this candle. 4 periods where it went sideways, thus market correcting through time. And now this particular move we've seen so far today has broken past this downward trend, which is showing, again, bullish signs. And when we look at this overall, we're saying, okay, now I'm looking for this market to potentially make a run up towards this higher end. And I'd be looking more towards this significant Fibonacci level, which is roughly around $42.25. If, of course, this is not the case, this would be an obvious failed breakout. And from failed moves can come fast moves. And I'd be looking for the 18-period average of highs as well as this previous support level. That's roughly at about well, that's exactly at the Fibonacci mark of 38.10, and the Fibonacci, or this level here, is 38.79, going higher, or roughly 39. What's important is the hold of the 38. It's held it well. Now 39 has been holding very well over the from last week, that is. 39 has held as support. Question is can $40 hold this week as support? If it does, then that's an extremely bullish sign. We'll now finish this off within the quarter day chart. It's now 2:37 p.m. The price pretty much hasn't changed. It's went from 40.40 to 40.38, and still pretty much the same. And this moving average is a 5-day front-weighted moving average. And within this, we are above what rising, and has pretty much went flat to upwards movement. Therefore, showing that the market's been in a correctional phase, because it dipped down here between these averages, did not come down to this Fibonacci line. It does not have to. It can, it didn't. And comes up to the top part, back to the bottom. Then it's breaking through above this significant resistance level, has a break above it, and then boom, back at the level. Again, when I'm looking at a situation like this, what I personally like to do is I see the break above it, which occurred yesterday, and now I see this 18-period average of highs in at $40.24. Well, there's your entry point. And not only do I see this, but I'm seeing a bullish candle. That's the candle that looks like this and something like that. This is the one that 80-90% of the time would be bullish, and this would be within that 80-90% of the time. It found support at this 5-day moving average of closes. And it really needs to get going to really make things uh, in a bullish mode, because if it doesn't do it now, then the market is really looking to head neutral to lower, because you've had your correctional phase already and you're looking to break out. If it doesn't do it now, then it's I would have less confidence on the short-term time frame within this market. And if I'm looking for any sell opportunities, if I'm going by paper, I'd be looking for that significant $42 Fibonacci level as far as selling on strength would be concerned. But then again, this is my strategy. Everyone has their own ways of doing things, their own styles, and that's what's so great about this world is everybody is unique. Find what works for you. All of this type of game within the paper, it's a casino style game, and if you're good at it, you enjoy it, and it's something that's beneficial for you, then that is amazing. As far as a physical game is concerned, if you enjoy collecting it, if you enjoy protecting yourself from fiat collapses, once again, congratulations. I don't want this to go on too long because we got 1,000 seconds almost. And have yourself an amazing day. Bye bye.